dive into Nubank today. I've been working on this pretty much all week, and I've gotten to the point where I basically can go through it. Now, I will try and drop this uh, Notion doc in the top of this YouTube video. I don't know if I can make it public and anyone can view it, or have to pay some premium. If I have to pay a premium and I don't have anyone using my stuff, then I'm probably not going to. But maybe I'd move it to like Medium or something. So yeah, obvious disclaimers, guys. This is not investment advice. Please do your own research. I did find out this through Karos Research. It's linked here. I highly recommend you check this guy out. He's got a lot of really information, and I think his written article on this is much better than anything I could do. The product I use is Stock Unlock, which we're going to be looking at today. And then a lot of the graphs you're going to see here are 2023 Q4 slides. And then this is a Latin American company. So all numbers are using foreign exchange. So the Brazilian, I forget the exact, like what they call it. It's like BRL or BSL or something like that. It's currently like 5-1. So for every 5, I'm so used to pesos. I don't know Portuguese. I do know Spanish, but let's say like the Brazilian quote unquote peso, 5-1 right now. So obviously if it gets weaker, then it affects these numbers, and that's just something important to note. So we're not going to go through this TLDRs because we're going to be going through this entire video. But what is Nubank? Nubank is a digital bank that was founded in Brazil back in 2013. It's founded by a guy named David Velez. David Velez is actually a Colombian. He actually went to Stanford to get his MBA, and then he spent some time at Sequoia's Capital. And that was during his time where he was basically interested in doing a startup. And I think there was probably this interesting conversation where like, hey, David, you're always familiar with the Latin American market. He probably wants to grow, not just his company, but the market he's very familiar with, just having that positive impact in the world. And he was probably looking at business opportunities, and I think banking was definitely one of them. So I think what's interesting about Nubank, and you should need to understand, is it's a Brazilian bank. And why is it a Brazilian bank? Well, it's like, Brazil, especially back in 2013, was one of the fastest growing economies in the world. We were going through a slight recession at the time, but I think they were $2 trillion at the time. I think the next closest probably would have been Mexico, which would have been $1 trillion less. So it's just a very basic, hey, it's a very big economy, a great opportunity. The other thing I'd mention about Brazil is they're a very credit focused economy. I think it's one of the most profitable banking sectors in the world. If you go look at a lot of the most valuable companies in Latin America, a lot of them are Brazilian banks. A lot of the most valuable Brazilian companies are Brazilian banks. So I think one thing I love is these numbers here. Now, I don't know if you can see them, but this is basically showing their customer growth. So if you go back to 2017 here, they had about 2 million customers. And then by the end of year 2023, they had approximately 95. So as this video is being made, they actually just hit 100. So we're going to say 7 years on, they have literally 50x their customer bank. And if you're seeing this number right now, this is about 95. This is 93.9 million end of Q4 2023. So in the 4 months since this has happened, they've literally grown their subscriber count 6 million. So they're still growing, their active accounts, they're still growing by 1 million active users a month. That's still very, very fast growth. And I'm going to guess a lot of that we'll see when they come out with their earnings report in a few days here. A lot of that's still in Brazil, guys. So they're expanding to a couple other Latin American countries, which we'll talk about later. You can actually see there's Mexico and Colombia here, and we'll talk about that potential growth. But that means even now, everyone and their grandmother knows about this company in Brazil. Okay, everyone, probably has a bank account at this point, and people are still going to Nubank, right? So I think that just shows how incredibly powerful the product is. The other big numbers you're going to want to look at is they had over $1 billion of profit in 2023. Now, I cannot emphasize how powerful this is. You are making $1 billion profit in the Latin American economy. The Latin American economy, okay, and really you're just in Brazil right now, but the Latin American economy is the fourth of the size of the United States economy with twice the number of people, right? A fourth. So you have to understand, if you're making $1 billion profit in the Latin America, like, you are very, very, very wealthy. That is a lot of money. And if you're very smart with that capital, you can do very, very well. I cannot emphasize how powerful that is. Like, $1 billion in the United States is like strong, but it's like the cash flow of like Google or something, probably not quite that, but I'm just trying to give you like the best apples to apples of comparison I can give you. So of 100 million active customers, right, they have 80% activity where 80% of people are active at least once, and 60% of people use Nubank as their primary bank account. So I don't know enough about bank account usage, honestly, in the rest of the world, but that is actually a very sticky product when you think about it, right? That means for every 10 people who use your product, 6 people will use your product as their primary source. And the nice thing about a bank is it's like once you start using a bank, you like it, the reason for you to switch, the level of effort is enough. Like you usually won't, even if there's better products. Um, One of my favorite metrics they have is this: it costs them $7 to acquire customers. They make $10.60 per customer, and they spend 90 cents, right, to bank them. So that means literally they make a full return on investment for most customers, like within the first year. Now, I will say you have to understand about this $10.60. Okay, the income per customer goes up over time, the amount they make per month. So it's not like they sign up and they make $10.60 the first month, right? And you can actually see it in this graph here. Again, I think it's probably hard to see, but you can see like by month 5, right, approximately they're making $4 a month per customer. So I would just say, if we're going to be extremely lazy about it, like within 6 months, they make a full return on their investment to acquire a customer, which is extremely, extremely good. And this is a very interesting like point and like selling point to me is if they're not really advertising, okay, they might not need to advertise. But what if they did advertise? Like what kind of growth could they potentially happen if they started just ramping up their advertising? And like one of the things I love about this company, we'll talk about this later, is they have so many opportunities for growth, right? Where it's like, it's always nice, when a company has a very good and solid business and a very stable business, but it's even better when it's like they have all of that. They have a clear, obvious room for like number one priority growth, and then you have like 5 extra things after it that are great, very strong opportunities. So we're going to go through that later. You can see here, all this is really saying is, hey, the longer the customer banks with Nubank, the more products they use. And you can actually see, it's hard to see this, but the lighter colors are older. So back in Q1 year 2017, they're using one product, right? And by the present, after, here we are, 81 months, they're using about 4 products. And you can see the newer customers start out just using 3 products right away. And, I guess they probably only offer 4 products, but you can see within a couple of years, they're using, all 4 whatever products they are. All this is really saying is people just really like their products and they get massive adoption of all their products. So if you have like 4 different revenue streams and every one of your customers is participating in those 4 revenue streams, that's very, very good for business. The other thing I want to note here that's really important to understand about these 2 graphs here is this is showing is your average revenue increases the longer someone banks with you. So what this means, so anyone who doesn't understand what this is saying is if they do not grow their customer base, the amount of revenue they will earn per customer will increase anyway. They don't actually have to grow customers anyway to increase revenue, right? The longer these people bank with them, the more money they make. And I'll make a note, just talk about this business model. You are banking to lower income customers. So how do you bank effectively, right? You basically allow these customers to build essentially credit, right? I don't know if they have like legitimate, like the same credit score, but you build trust. So you will start out, giving this first customer, hey, we'll give you $50 of credit, right? Very, very low, by the way, not a lot. But if you pay this credit, right, 6 months will give you 100, a year will give you 200, and so on and so forth. So a lot of the reason why this revenue goes up over time is these customers adopt more products, but they also establish more trust with Nubank, right? So as they establish that more trust, they get better access to credit, which means more money for Nubank and better credit for their customer. So it's just basically like how that works. And the other thing I want to add as well is Nubank is a tech company. They have 100 million users, okay? Everything is tech focused, machine learning, AI. I prefer the term machine learning here, to be honest. A lot of this is machine learning issued credit cards, which means they have a absolute shit ton of data. And when you want to issue credit cards at mass, okay, and you have a huge amount of data, like if you don't understand, like if you want to make your, let's just say AI very good, the more data you have, typically the better, because there's more to learn on. So when you have this data, because you can't just go purchase this, right? When you're generating this data through your own customer use and you're learning from your own data, it means your ability to issue credit cards and issue them effectively is going to improve, right? So like you see this over and over. There's kind of a theme here. It's like things are good and they're even better, right? So I think it's just one thing that's fascinating about this product is like we're already tech focused, right? We're already using machine learning. We're seeing rapid growth. We're seeing success. Because we're seeing success and we're getting more users and more growth, we have more data. Because of more data, we can make our algorithms even better, right? It's just like win, 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 win. And I want to be clear, everyone, I'm not trying to sell you this on this product, okay? I don't care if you buy Nubank at all. I'm like completely indifferent. I'm not a bag holder yet, so I guess we'll see. So their primary source of revenue, just mentioned here, is they have interest earning income, which is literally just like basically earning money off credit cards, and then you have commissions and fees. So I don't quite understand how commissions and fees work within the Brazilian banking market, but they do have this thing called Pix, and Pix is their national money service. So you can basically imagine if you had nationalized like PayPal or something, and it was just like owned and run by the government. That's what Pix is, and I think a lot of these commissions and fees come through Pix. So I think there's like this win-win situation where you have this nationalized money service where everyone can use Pix, and then the banks obviously have to integrate with it legally, but there's like rules and laws so the banks can profit from this, because that's fair, right? Like it's not fair if banks have to support something and not make money. So I just think that's very interesting. Now there's pros and cons to have a very credit card based business, and I'm going to talk about this really quickly. So when you have a very credit card business, you can be a little bit more prone to economic downturns because if people have less money, right? It's not that they're not going to use credit more. They might use it more, but they might not be able to pay that credit, right? So it's not necessarily an issue of usage per se. It's the issues to pay in that credit. So you will have a higher delinquency in terms of credit cards. It also means like again, I'm not an expert in credit card business, but you could be a little more susceptible to boom and bust. When things are good, people might be a little loose with their credit. When things are bad, they might be a little more loose, but not out of necessity. So I actually used to work at Capital One, which I'm mentioning it here, but Capital One has made a shit ton of money doing this, where they're basically just have very good machine learning algorithms and they can issue credit card with limits within minutes. Now, the only downside I will say is they're probably a little more conservative, all right? So they might not make as much money as they could per customer, but I think the amount of money you spend issuing these cards, the amount of people you can issue cards, and having a clear pathway to grow is all still advantageous. Now, these are just the numbers in summary, and I really, really love these numbers here. How did I add this? Delete. Okay. Their total revenue was 737 million in 2020. Okay. It doubled in 2021. It actually more than doubled in 2022. And then it went up, I think this is like probably like 80% or something in 2023. So you're just seeing like literally explosive revenue growth. I mean, and you see this, they 8x their revenue in like 3 calendar years. I mean, or probably 4 calendar years, I guess here, which is just absolutely insane. So what would I project their revenue for 2024? I guess we can go look into that later, but I don't think we'll see a doubling of this. I think conservatively, and like a very reasonable number would probably be around the 12 billion mark. What I love though is not only have they increased revenue, guys, but they increased earnings. Okay, so by end of year 2023, they had $1 billion in profit. I mentioned this earlier. That is a cash flow powerhouse in LATAM. But the thing I love about this is I'm so sick and tired of tech companies like AKA Uber, where it's like all they show is revenue growth, but for some reason they can't actually generate good profit growth. So if I'm going to buy a tech company, dude, I really want to make sure, like, are you going to be profitable? Am I buying like just a revenue? Like, I don't care about revenue growth if you're not making money. Let me put it this way. Tesla could break record revenue numbers by selling their cars at a 50% discount. And they'd also have record losses, right? So it's like revenue growth, I think is a metric you have to be wary. Revenue growth is good, but income growth is great. Okay. So the only risk I'm going to mention here that we should be cognizant of is like, hey man, they made a shit ton of money, right? In 2023, that's 1 year. That's not a great historical backlog. That's not great source of proof. It could have just been very like literally like, I personally don't think it's lucky. I think this has been like built over time, but it could be, and that does happen with businesses sometimes. So let's talk about growth. I'm actually pretty excited about their growth opportunities. And I think the thing I'm most excited about is basically this. They don't need to go beyond Brazil to do very well. I think they can grow to beyond $100 billion company with just Brazil, which is what you want to see, right? You don't want to be contingent on like, hey, we've succeeded in this market, but it doesn't mean we'll go succeed in another market. And we'll just go through this. 30% market share for credit cards, 5% market share in personal loans, 3% in investments, and 2% in insurance. Now, I'm not entirely sure what investments and what they mean by this business, to be honest. Maybe they mean like helping invest people money for them. But I do think what's very interesting is they have 30% of market share for credit card, but they have 50% of the adult population in terms of who are banking with them. So I don't see any reason that this should not be able to go 1 for 1 for their banks. That doesn't seem like a crazy thing to me. So this is naturally going to grow. I don't even think that's a question. And I'm just going to take a guess here, man. I think they will. I think they can easily get 60-70% a share of the adult population in Brazil, literally just because they've been showing the numbers, dude. So like they have grown. They're growing a million users a year still, or a month. I mean, still. So they're gonna add at least another 12 million users this year alone, right? So if you already have like I think 100 million or so users, and you're still showing 10% growth in your user base, even when you're this saturated, that's just nutty. So I don't think it's crazy to think that they can literally double this market share. I don't think that's a crazy thing to believe is possible. But even then, and like as I said, things are good, but then they get great. You have the opportunity to grow into the personal loan market, right? This is very interesting to me. If people are having a hard time getting credit cards, the most basic form of, basically what you might call like debt, how hard do you think it is to get a personal loan? Do you think you can get a loan for a house in Brazil that's not like the stupidest interest rate of your life, or like, and you think you can get it easily? No, you can't. You think you get a loan for a car? No. So I think there's a huge opportunity here. And then these ones, like I'm less over the moon about, because I just don't know crazy about it. But I will say, these are very logical businesses to go into. And I think the general thing I like about this is if you get one customer and I'm banking with you and I'm establishing a relationship with you, and I'm a young guy or young woman, and I'm building credit with you, I'm gonna get older, so I'm gonna need personal loans, and I'm gonna need investments, and I'm gonna need insurance. And if it's easy for me to get it with Nubank, why would I go anywhere else? So I think these businesses will grow organically. I think people literally will just get older and they will grow into needing these, and they'll have such established relationship with Nubank that like it's going to be hard for other people to compete, right? Because you cannot issue a loan without identifying risk, and you're not going to have the same risk profile as Nubank's going to have because you haven't had that same customer relationship. So, again, like this is very just, theory. These aren't hard numbers, but I just like when I look at this stuff, I'm like, man, this is good, but it's also very great. Again, more on data here, the power of data. They believe they can get 160 million users in Brazil, and they're at 100 million users today. So let's think about that just in terms of like the most brain dead growth. This means they think they can grow their customer base another 50%. Okay. So based off that alone, right? If they can grow their customer base by another 50%, right? It means they can achieve at least 50% growth by doing literally nothing. And, I don't even know what I'm saying. I think I'm trying to make a solid point here. I'm not. Okay. They can get 160 million users in Brazil. That's great. Done. Okay. Let's talk about Mexico really quick. So Mexico is actually the same size and economy as Brazil. They're about 2 trillion, a little over 2 trillion. They've been actually much more stable economy. The most beautiful thing about Mexico, guys, is they're next to the biggest economy in the world, the United States. Mexico will always do well, and we're a little bit seeing this. I'm not sure what's going to happen, but these trade relations in China, in my opinion, are very good for the Mexican economy. Because the Mexican labor is not what it. Let me tell you, as someone who's like familiar with Mexico, let me explain something to everyone here. Okay, Mexican works a lot longer hours. They have a lot less protection. They get a lot less benefits, and they get paid a shit ton less. Okay, it's a very abusive economy to the Mexican people. Okay, it's truly, and I hope that changes. But from an American perspective, if you're going to build a factory, I want to be honest, I think you should treat them right. Like, I don't think you should just because you can't. But if you're going to build a factory, you're going to do trade, right? And you're looking for something that's reliable, that's like not across the world, there is potential there. So I think like just in general, I'm pretty bullish on the Mexican economy in the future for a lot of reasons. And the other thing I want to add here, real tidbit before I move on, we're starting to see this, but we're starting to see this is even better for the Mexican economy. We're starting to see established what I call white collar businesses go into Mexico, right? Where you're seeing like Google, I think, just is hiring people in Mexico City for certain like products they want to maintain, and they want very good engineers and they want a better cost. And that's so good for the Mexican economy, guys. You have to understand many of these economies are still like based on like commodities and stuff like that, or they're very like service based, where people like cut hair or they do manual labor and stuff like that. And that's all great, man, but like white collar increasing your like what I don't know call white collar economy is much more recession proof. The ceiling is much higher. Let me put it this way. The United States economy is has a lot of white collar stuff. There's a reason why we're the richest. Okay, TLDR. These numbers are very good. 60% of adults in Mexico do not have a bank account at all, and 80% don't have a credit card at all. Now, I want people to understand it's a very cash-based economy, and I think at face value, people are like, well, if it's cash-based, you don't pay taxes, which is true. But I think something that's worth noting is if you're not, it's true you're not paying taxes, but you're also not investing that money as well. And there's a lot of like financial illiteracy. Did I just? Why is this 1-2? Okay, there's a lot of financial illiteracy. Weird. Okay, there's a lot of financial illiteracy in Mexico, in LATAM in general. So if you can just put people's monies in government bonds, a lot of these government bonds pay like 10%. So you can compound people's money in Mexico, you know, at very high interest rates by just putting their money in government bonds. So I think like the appeal of a bank account is not there right now because you pay asset fees, you don't get anything out of it, and you have to have your money accounted for, so you pay more taxes. So I think there's definitely a huge opportunity here if they can execute. Um, the only thing I want to say as well is on their Q4 earnings call, one thing they mentioned is that, hey, we're very much in the planting phase right now. We're planting seeds. We're not in the harvesting phase. So the reason why, we can go back to this graph up here. You can see they went into Mexico, man, like way back here in 2019. And I think their active Mexican, users is like 3 or 4 million right now in a country of, 100 plus million people. The reason why it's not seeing the explosive growth, man, is because they really tested their theses before they scale. So there's a reason why Nubank is, it's growing, blah, 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 blah. And then you see this explosive growth because right when they start hitting these 2020s is when they have enough data to know how they issue credit cards at scale, right? How to issue bank accounts at scale and start, issuing a lot of these products at scale. So with Mexico, it's going to be the similar situation, right? We're talking about 10 years leading up to this explosive growth. So Mexico, man, I think it'll be a little bit faster. But, if this is 2019, right, we're probably about 5 years into this. So I think Mexico, we could see some ramping up, but I think they're moving at a pace they feel comfortable with. And when they start feeling really good about their numbers, right, like their non-performing loans, basically, which means people's not paying their loans back. And, their cost to acquire customer, cost to bank customer is when we'll see massive scaling. So the TLDR of all this is they can just grow in Brazil. They don't have to do anything else. But I think they have a great opportunity in Mexico. Colombia is similar to Mexico, but it's not nearly the same opportunity. And seeing growth in Colombia would be great from the standpoint if they succeed in Colombia. I think they'd go to Peru and Chile. Those are the other big economies that they should definitely would be looking at if they succeeded here. The other big economy I mentioned here is Argentina. But Argentina is notorious. I would not go into Argentina. I'd be very concerned if they're going to Argentina. The Argentines are terrible at managing money. Their new president is looking to get this under control. So we'll see. I mean, he's crazy, but I kind of like him because he seems like he understands that it's going to be a lot of pain for the Argentine people to help the future generations. One last thing I'd add, dude, this is just the most crazy pun of my life, but Venezuela actually has the largest oil reserves in the world. So if Venezuela ever got their shit together, that would be another country they could go into. Unfortunately, Venezuela is horrifically mismanaged. I think it's like one of those weird fascist socialist countries right now, so I don't really see it happening. Let's talk about risk within Nubank. Yeah, I don't know if we're going to cover the rest of this. God, this is so long. I feel like I've been talking a while now. You're in Latin America, guys. So in general, 2010s were not kind to Brazil, which is really useful for validating that the risk is not what it seems, in my opinion. I think that's very encouraging. So their economy actually peaked in 2011, guys, at 2.5 trillion. Okay, almost 15 years later, their economy is still less than that. So that means Nubank grew not in economic growth like the rest of everyone else in 2010s. They grew in economic decline, right? So if you succeed in economic decline, you will succeed in any environment, which is very encouraging. In general, I just have some numbers here for context, but the United States grew 10 trillion in that time frame. China grew 10 trillion, and then Brazil reduced by 300 billion. So just not a good economy, not good inflation. I think all this does, it says about this major risk is, hey guys, no matter what happens to the Brazilian economy in the next 10 years, Nubank will continue to be as successful. Will they have 20% year over year growth? Probably not, if things are not going well, okay? But will they continue to do well in spite of things? Yes. I think all this is saying, guys, is like you can't predict a recession. So what I'm saying here is if there's a recession, I don't think you're going to lose your shirt in the stock. I think you can still hold based on thesis, right? Which is really like, I'm trying to talk about this risk here. If Brazil does well, right, which it seems like they might be turning a corner here, then I think Nubank is going to do extremely well. So that's just the general thing. Latin governments. You guys can read this. I don't feel like going through this, but basically, you had this president called Lula. He seemed really good. It turns out he wasn't. Lula got convicted, went to prison. His successor got impeached. Then they elected Bolsonaro. Bolsonaro is ridiculously far right. He's literally a complete and total nut job. But he's like the Brazilian Trump, except he's definitely worse. And then Lula, he got his conviction expunged, and he came back, and he's president now. I think this is not as a good, actually not a good thing. If Lula committed a crime, he should not have his conviction tossed out. That's corruption. So, yeah, there's a lot of corruption. All of Latin America is corrupt. I think I put it somewhere here. Yeah, Peru had to build a prison because they had so many ex-presidents convicted. Like they literally had like I think 4 or 5 presidents in prison at one period of time. And yeah, I've literally had a Peruvian tell me this, so I have it on good authority that this is true. Conclusion, guys, I bought 500 shares at a cost base of $11.86. So yeah, I feel pretty good about this position for now. I probably won't add much to it, to be honest. Calculator. So I just want to go through these numbers really quick. So if we go net earnings and we do a 10-year projection and we do a metric growth rate of 20%, and then we have a price ratio of 30, then you can see that the fair price value would be like $3 or $2 above what we're currently trading at, or 280. So these are very optimistic numbers, to be honest. Like, you look at like, yeah, like where Meta and Facebook were at and where they are now, and those are like some of the best tech companies in the world. I think a lot of them kind of stabilize at like, this P ratio of like 25 over this period of time. So, yeah, and a 20% growth rate of earnings is a lot. But this would match them with the biggest bank in Brazil in 10 years. So I think that's possible, actually. And of course, the Brazilian economy is also going to grow as well. So they don't even like have to take market share from this biggest bank as well. Like, I think this is plausible. I don't think it's like going to happen, but you start like kind of looking like what if we had a much lower price ratio? Like what if we had a 15 and 10% growth rate? And then you're kind of looking at like the DCF fair value would be like $9 less. So that's kind of interesting. I think 10% is like way too low though, to be honest. I think we're always going to be more like, I think a much more pragmatic conservative outlook's like more about here, which means your downside's like your margin for error is a bit of a fatty here. I'm trying to think. Yeah, I mean, yeah, I think this is fine, honestly. So yeah, I think in ideal scenarios it could grow more though. I don't know. Like, I guess we'll see. Yeah, let's see. They're making $10 a revenue per customer right now, and they need to get about 48 billion. What is the math on that? If they're making what's here, we're gonna use ChatGPT, it's easier. Okay. 48 billion divided by 160 million. It's 3. Okay. 300 divided by 12. So they need to get to about $25 of revenue per customer per month. So they need to effectively double the revenue per customer per month over the next 10 years. And they need to add 50 million users. That doesn't seem crazy. That seems very plausible, actually. That means they need to increase revenue by average $1 per customer per year. So I guess it'll be a very telling year, actually. It'll be a very interesting year. They're at $10.06 of revenue per customer this year, so they really need to probably get to like 12. You know what's so interesting about these projections is like, this is like the Brazilian market, right? But if you add in, like the Mexican market, if they can get Mexico, man, they're going to do very well. So I guess that's the question. Can they get Mexico, and how far can they go in Brazil? So yeah, that's it.